As we get set to enjoy the holidays in these final weeks of a year none of us will likely ever forget, this week we will look at what may be in store for us early in the coming year 2021, as precious metal bullion bulls are further setting up to reap rewards from years of positioning and patience. Hello, this is James Anderson on behalf of SDBullion.com. Before we jump into this week's SD Bullion market update, do me a favor and make certain to smash the like button here, especially if you enjoy curated content pertaining to the building precious metals bull market unfolding. As politicians and bureaucrats in Washington, D.C. squabble over what amounts of crumbs they may issue to the U.S. citizens, one only has to look at the record-size explosion in the fiat U.S. dollars M1 pile to know that the 2008 global financial crisis was a mere speed bump to the Great Reset events currently unfolding. And let's also quickly look at the exploding M2 aggregate pile for a larger context of what is happening without full explanation as to why. Here you see a quick definition between M2 versus M1. This even larger pool on this chart combines not merely fiat currency in circulation or demand deposit accounts, but it also has near money items like savings accounts added to it. Look at the growth of M2 back when these three people lied to us versus now in 2020 for full context. Even more ridiculous is a website we have cited before on this channel, which uses M2 growth of the year divided by fresh gold and silver supplies for the year to deduce a relative valuation. And so we now have hyperinflationary silver and gold price targets that are being shown on the DecClack website in real time. Moving on, hopefully you took advantage of the last 3 months and a bit more of silver and gold price consolidations. We are setting up for robust price breakout events soon enough. Just about 10 days ago, I asked the following question on my Twitter feed regarding how silver and gold spot prices denominated in fiat Federal Reserve notes might end this year, 2020. Majority of the hundreds of responses were short-term bullish, looking for gold to clear 2K and silver to push beyond the technically important 26 per troy ounce level as the year turns. This is the gold-silver ratio since the viral crisis took hold of the world economy in 2020. Technically, it looks bound to dip below 70 soon enough. And backing out the time frame of this chart and looking at this 21st century bullion bull in context, next year, 2021, it would not surprise us to see a run back towards the 50 level for this key precious monetary metal ratio. And before this bullion bull goes manic, to see the gold-silver ratio low of 33 in the year 2011 get passed into the 20s and perhaps even lower for the gold-silver ratio. Bearish price action and headlines keep dumping on the fiat Federal Reserve note in comparison to other major devaluing fiat currencies like the euro, yen, pound, and Chinese yuan. It's quite possible we end the US dollar's last 5 years of relative strength and enter a prolonged bear market in relative declining fiat USD values in the years upcoming. Looking out at next year, we must also look at the record-breaking store of value precedent both gold and silver markets set this year, and perhaps extrapolate for what more might be coming. Reuters was out this week with a sigh of relief for the physical gold market, now that the COMEX is not currently hoovering up all new gold bars refined and issued out of the world's gold refining nation of Switzerland. You can see the explosion of U.S. gold bullion bar imports from Switzerland represented in the tall blue bars bottom right of this chart. The United States is on pace to import over 500 tons, or more than 16 million troy ounces of gold this year from Switzerland alone, likely all newly refined gold bars, valued at around $30 billion in current market value. Typically, the USA was such a weak Swiss gold bullion bar importer that Nick Lard's Gold Charts R Us website had them filed in the Others section of this chart's key. You can see the U.S. gold import explosion began around March this year. And turning to stark changes in the physical silver market in 2020 and likely ahead, the Silver Institute published forecasted data for the year citing the massive increases in both physical silver bullion buying as well as in exchange traded products this year. Year on year, the silver market lost about 50 million ounces in annual mine production due to the viral crisis and the shutdowns of mines around the world, while around 587 million ounces of silver was bought for store value bets. I cannot overstate how ridiculously large that combined number is. It's almost 2 times the store value bets that were made in 2010, and that's the same year that QE1 wound down and QE2 began. I'll pause here briefly so you can see the silver store value demand from 2020 in context versus the 2010s, respectively. And remember, we have this happening as the silver market is currently on the verge of blowing through the key 26 per troy ounce spot price level here at the end of 2020. That's all for this week. Happy holidays to everyone out there. As always, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.